Hello everyone, welcome to Accounting 2010. This is Jim Forbes, your professor. I'm going to do some short videos on each chapter. I'm not going to do all my lectures. I think that would take up too much time, but I'll try to give you a condensed version. Starting with slide 1 on chapter 1. This subject is demanding. It's way more demanding than most community college students expect. Most classes in community college typically deal with concept theory and some vocabulary, but accounting is a little bit different. Accounting is actually on a national level considered one of the hardest classes in all undergraduate college. And the reason for that is, there's a lot of subject material. It's very wide, it's very deep, and it's very detailed. It is also we do cover, obviously, the concept theory and a tremendous amount of vocabulary, but we also do application, and that application process is very, very demanding on students. And so you should plan on devoting quite a bit of time to doing your homework. This class originally was a 3-unit class. I got it up to 4-unit because I don't think you were being fairly compensated for the amount of work that this class will demand. So again, just a quick warning on try to keep up and plan to do quite a bit of homework in this class. Again, accounting is basically the language of business, and I would highly stress learning the vocabulary and spending quite a bit of time. The vocabulary in accounting is very, very specific. It's not general. Just don't take it on a general term. Each term has a specific meaning and purpose, and a lot of this derives from the legal industry also. So do spend time at the end of the chapter in studying the vocabulary. Again, accounting was invented in the 1600s. It was actually invented by a man who was a very good friend of Christopher Columbus. And what he invented was a double entry system. And what that means is, for every transaction, we record 2 or more components to that transaction versus a single entry. Because of accounting deals with numbers, everyone thinks it's sort of like an absolute science. It is not. It's a social science, and it has a lot of failings because of human beings. One of them is it's still in development, it's still evolving, and laws change and will continue to do so. So this makes, especially in tax, very convoluted sometimes. There are a lot of opportunities in accounting. Virtually every business organization uses accounting to some degree. That is true of government, nonprofits, as well as every industry. So in business, so there are a tremendous amount of opportunities within the field of accounting. Accounting involves 3 processes: the identification, the recording, and the communication. First of all, the identification and recording is the bookkeeping component of accounting. Communication is where we report back to the decision makers or the various stakeholders. And I think the highest paid skill set in accounting is your communication skills. So do pay attention as you try to develop yourself to your speaking and writing and reading skills, because that is where you can make a lot more money, being able to communicate effectively to the various stakeholders. Slide 4. Again, there's bookkeeping and accounting, and the upper levels of accounting is communication. Case in point, the highest level of an accountant for a company is actually called CFO, which stands for Chief Financial Officer. You notice it says financial officer, not accounting officer. This is very tied to finance, but obviously they need the accounting to be able to derive that information from what to do. So it's way more than just bookkeeping. Important slide, on slide number 7, external users versus internal users. Internal users is within the organization, within the business themselves, and internal users is not regulated. Companies can use a variety of reporting formats to fit their personal needs. Whereas if you do communicate to external users, it is highly regulated, and this is what we will be studying. We'll be studying management accounting in the latter chapters of Accounting 2, but not this semester. We'll be focusing on the external users And those external users are like lenders, shareholders, could be regulatory authorities, taxing authorities. It's a broad market that relies on this accounting information. I'm going to skip this chapter. Ethics, I do spend a lot of time in my class lectures discussing ethics, and I actually put them in an ethical situation. My opinion is you will come across many ethical choices when you're in the accounting field. That is because you're dealing with money. It's not a possibility, it's an absolute certainty. And I can't teach you from good to bad. You just have to become cognitive, and you're going to have to make choices in your life and live with them, both good and bad. I personally have left about 5 companies because they wanted to do improper accounting, which I was not willing to do. And those are the choices you have to make sometimes. Slide 10, generally accepted accounting principles. This is the term that we're using here, and this is what's known as GAAP. Notice that it says generally accepted accounting principles. It doesn't say always accepted, it doesn't say universally accepted, it doesn't say globally accepted. It's just generally accepted. These are the standards that we use for reporting accounting information. But there are some people where GAAP is not sufficient enough. Case in point, for many years I was a corporate investment banker for Bank of America. And when we dealt with companies, GAAP is where we started, but we then went into far greater detail than what was required under GAAP reporting. So don't think that generally accepted accounting principles, or GAAP, is the highest level. It is not. It is a legal level, but it's not the highest level. Slide 11, qualitative characteristics. Yeah, accounting information needs to be relevant, it needs to be reliable, it needs to be comparable, and it needs to be consistent to have any value. Relevance. It makes a difference to the decision. And they won't define exactly what is relevant. This is one of the confusing areas in the legal field. What's relevant to one person might not be relevant to another. And this is one of the reasons why we've gotten to such extensive notes in the financial statements. You won't study notes in your annual reports until intermediate accounting, but it is usually the far largest component of accounting reporting is the note sections of an annual report. Reliability must be free of error. Faithful representation. The hardest part for a CFO or a chief financial officer or an accountant is the neutrality. And the reason why that's so hard is often management will try to pressure you to put the most favorable spin on the financial presentation. And you can't do that. And that's the hard part. 95% of the time you're an employee of that company. 5% you're the cop. And you're the policeman who has to warn management that they're crossing that line. And sometimes management does not want to hear that or will care. And those are when you get into your ethical situations. Comparability and consistency. Different companies use different or similar accounting policies, and it's fully legal. And companies can change their accounting policies from year to year, although they are strongly advised not to do so. Most companies don't until there's a significant reason why. And when they do change, they do have to report both standards so people can compare. But this different accounting policies is actually the reason why Wall Street uses analysts to be able to decipher from one company's reporting techniques to another. So it's not really relied on by the accounting industry as it is so much as the financial industry. Constraints in accounting is materiality and conservatism. The first one is material. Will it influence a decision? The courts will not define what is material. And again, as a result of this, accountants go overboard in trying to report everything to protect themselves legally. And until the legal industry defines material, this will continue. And it has made accounting reporting to be quite a large volume of material now, in excess. I personally think that companies should be able to define what is material, like for instance 1% of sales or 1/4% of sales, and hold themselves their standards to that, and then adjust according to market valuations. If the market does not believe in that being material enough, they'll price down the stock, and then based on cost-benefit analysis, companies can then decide what is the level of materiality. But unfortunately, we don't let the free market decide that right now. That's decided by regulators. Conservatism. When in doubt, choose methods that least likely to overstate assets and income. Do not intentionally overstate. Again, this is the area of problems because management will naturally be self-serving and it will try to state the most positive picture, and you're the one that has to stand the ground. And sometimes that can mean losing your job. But when given a choice, you need to choose the most conservative presentation of financial information. I'm going to skip chapter 18 here, the fraud triangle. This is a huge area of accounting. Fraud does exist extensively. I'm not going to try to make you attorneys at this point in time. It's way too early, so I'm going to go ahead and skip this chapter. The rules of accounting. Generally accepted accounting principles, and you do need to know what that term is. I mean, it will be on the test. The rule-making bodies are really three, and the major two is the first one, the Financial Accounting Standards Board, known as the FASB, and the Securities Exchange Commission, more commonly known as the SEC. These two bodies work hand in hand to develop what are the accounting standards in the law of the land of the United States. The third party, to a smaller degree, is the American Institute of Certified Public Accountants, but mainly is driven by the first two groups. There are international standards which differ from the U.S. standards. You will get into this in advanced accounting, or if you do take international accounting. I'm not going to spend much time on it in the accounting 1 or 2 because I just think it's going to too much detail. You need to get on first base before second base. But those standards do differ. They're trying to bring them to converge together, and that process is known as harmonization. But due to political processes, I don't think that will ever actually be achieved. So there are a variety of accounting standards on a global basis out there. So it's not just always the U.S. GAAP standards that are used. Conceptual frameworks. I'm going to skip that chapter. I want to talk about slide 22, Sarbanes-Oxley. This was a law that passed maybe 10, 15 years ago due to a large volume of financial frauds in the marketplace. And this put some stringent laws in place where the top executives now have to attest to the authenticity of the financial statements and can be personally sued. There's a lot of flare back. I could spend a whole semester discussing this law as well as another one, the Frank Dodd. But be aware that there are some major acts by Congress that do affect this industry. And I would suggest maybe some outside reading excuse me, on the Sarbanes-Oxley. The second one is the Frank Dodd. This came around as the financial crisis in 2007, 2009. And as a matter of fact, it's so large, it's over 2,000 pages long, and only about 45% of it has actually been implemented. And I think this is going to have some far-reaching implications in the financial industry for decades to come. It still has not been long enough to tell if it's going to be helping the situation or clouding the situation. I suspect there could be some unintended consequences which could lead to future problems down the road. But again, it was another major reform act by Congress. Principles and assumptions. You need to understand the slides. I would definitely spend some time in reading these. You're going to see this on the exam, but you'll also see it later on in your accounting career. And these come back to measurement, full disclosure, revenue recognition, and expense recognition. And then let's talk about the assumptions also. Individually, the accounting principles. We have the cost principle. In accounting, we don't go based on market values or theoretical values. We go on actual costs because there's actual receipts that we can trace this to. But that doesn't mean